Okay, hello traders. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Wednesday, October 11th. Michael Boutros here with you this morning. Good morning to you, D, Pete, Peter. Wow, we got three Pete's in here today. Pooja, Tom, great to see you. D, always a pleasure. Iman, D says, good morning, Mike. I'm catching a flight and need to leave in 25 minutes. Can we do Euro, Aussie, and Pound within this time, please? I will do my best. We'll fast forward to those three for you. I got you. Okay. Some interesting price action in the dollar. We do have some event risk still on tap later this week. The dollar finally coming and pulling back as we expected. We did come into a near-term support, so near-term we're seeing a little bit of a kickback there. But the broader biases remain unchanged. So on the list for today that I have is DXY, obviously real quick, dollar Swiss, euro dollar, dollar yen. We'll take a quick look at what Bitcoin's doing. That trade's panning out very well. Kiwi dollar, gold, dollar CAD, pound Oz, and Aussie dollar. If you heard something there that, or if you didn't hear something there that you want to look at, or if you have any specific setups you'd like to address, or any questions at any time, as always, feel free to throw them on the message board. So let's jump right in. Looks like D's on a little bit of a time frame here. So I'm going to just quickly go through the dollar index. There's really nothing to update you guys on as far as this is concerned. The levels remain unchanged. We came into the week early on looking for that pullback in the dollar index. Here's what it looked like on the 8th. Major key resistance level that we tagged on non-farm payroll at 94.20 to 94.15. I think we capped out at like 27 before pulling back. So we came into the June high day close. We soared right through that. 93.26 is the October monthly opening range. Down here, 93.10 into 93. This is the October monthly opening range low. And just lower, you have the 2016 low day close. We talked about that yesterday, as well as a basic 38.2 retracement right into the 93 handle. So, again, near term, if you look at the momentum signature, you're kind of seeing possibility for maybe some near-term divergence starting to pan out here. Definitely seeing it on the closer time frames. Here's what the 120 and the 60 looks like. Long and short of it is, heading into 93, holding short exposure, might want to lighten that load. If not, kind of reassess scenario there. Do still favor the downside, but like I said, near term could get a bit of a bump off this 93 handle. Okay, a downside break of the region still has all the same levels intact. So you're basically looking for 92.64 into 92.60 has been a pretty decent pivot in price, 50% retracement, some former swing lows there. So watch that as a soft target, but you'd basically be looking for a drop into basic trendline support off the yearly low. Okay, and based again on time, that's going to be a variable. So keep that in mind. What is the level at 93.52, please, Pooja? 93.52. June is the low. It's the June low day close. So you have to see it on the daily chart. I removed it off the daily chart to clean things up, but basically, if you go to the June low day close, 93.52 right there. So it's a reversal close, a pivot for the low. So it's the low day close for June. Make sense? It's basically right there. So it was decent. It was just a soft target, but it definitely turned and shifted the focus lower for us early in the week as soon as we broke back below that. Okay, so like I said, no change on this. Again, we made a nice turn at resistance. If we hold below these parallels today, it would continue to further sort of give us conviction to favor that inevitable break below 93. Okay, moving right along. Dollar Swiss. Actually, let me jump through the majors here for D. So let's fast forward to euro dollar. That's a trade that we highlighted in last night's update. As far as the euro is concerned, it was a beautiful turn. Again, remember the last time that we talked about euro dollar was back on the 5th, right heading into this near-term support structure right here. You had a basic 236 retracement. You had slope support. And as we were looking into NFPs, we were looking for, an exhaustion low into one of these regions. Obviously, the quickness saw this thing drop right into that region. Here's what euro looks like before reversing sharply right off that 236 retracement. So initial target 1769, that's out. Now we're heading into an interesting area of resistance, some former swing lows, a basic 38.2, 118.31. And this is the level I kind of highlighted last night as, look, if you're holding long exposure, you could see a little bit of a resistance hold here, at least for a struggle for the near-term price action. Obviously, looking at the dollar index, same thing, right? Same thing. You could see a little bit of a balance coming into some support. Euro could see a little bit of a pullback coming into resistance. Near term, I'd like to stay constructive of 1769, basically 1770. And the top side targets remain unchanged. It's 118.81 and 119.31 on a break. That would be the 618 retracement there and the upper parallel. But so far, so good. So far, so good. The only thing that would shift my focus, like for a serious down or a continuation or a big threat to the major uptrend, will be if we break back below 1728. That's the weekly open. All right. So if we're compromised on the weekly open status for euro, you got to kind of ease off any type of expectation for further upside movement right now. That being said, I'm looking to buy pullbacks well above this region. Again, top side target's pretty clear. Any questions on the euro? Pretty basic. Again, the major event risk left for the week is basically on Friday. You get CPI data of the United States, advanced retail sales, University of Michigan confidence surveys. Should be a nice one to close out the week. Okay, kind of regretting not having played the long side here on euro, but we did have a nice play on dollar Swiss, which I'll go over in a moment. But if you're holding longs, again, decent area, you might want to shave a little bit off, bring your stops into protective or better than break even if you can at this point, and look to see if you can't get that stretch near 118.80. All right, that's euro. Number two. I do want to take a quick look, D, before we go into Aussie and Pound. I do want to just take a quick segue into Swissy. Again, I feel really weird talking about Swissy so often lately, but price action's been clean. And if you guys read yesterday's report, again, this is one of those ones where, I kind of got out, but I wish I had left some on, and I'm obviously kicking myself now. There's nothing wrong with taking off another little bit here and kind of bringing your stop down to 97.70. Long story short, here's the break and continuation lower. So my concern in the near term here is that dollar Swiss is coming in some precarious areas. So, the broader ascending slope formation, let me bring this out to a 240 for you, has been very clean. Again, looking at where dollar Swiss is on the daily chart, right? Beautiful, beautiful resistance reaction off of a major confluence region. So the pullback here, the 50 line for the current ascending slope comes in line today, and you could argue tomorrow into the 97 handle, and that's what the first initial longer term target that we noted last week for a more dramatic pullback here. Near term though, if you take a look at price action, there's a couple of soft parallels that may interrupt things. I'm looking at this parallel here. It's the same slope as the broader structure we've been following. And then if you take that same parallel again, it caught these two spike lows. So my point being, if you're holding shorts, watch price action as we get into this region. I wouldn't jump out of any shorts. Don't do the same mistake I did. I'd be holding on, but definitely as we get near the 97 handle, I'd be looking to do something. If this were to break, you'd probably see an accelerated drop. I don't necessarily think we're in the market condition necessarily to warrant such a move. Maybe on CPI or some sort of reaction. But as it stands right now, I do think you possibly get some interruption here. So looking lower immediately on the Swissy, still got probably another 30, 25 pips to the downside I'd be comfortable with. Near-term resistance, 97.73. Bullish invalidation right at the weekly opening range high. Or excuse me, bearish invalidation. So this is the break that you would need to see to suggest continuation of the broader uptrend. And if we do break this, guys, this thing is going to rip. It's not my favorite scenario. Okay, I'm still looking lower, like I just said, but we always have to have that contingency plan and that awareness of where you are in trend. And the fact that we got this strong reaction puts further emphasis. If we do top that weekly opening range high, you could really see this thing start to take off. But for now, let's see if we can't get that drop near 97. Look for a near-term reaction there. Dollar Swissy, number 3. Any questions? Okay. Pound. And this is for you, D. I haven't really updated the pound lately because, again, it's one of those trades that have really irked me because I just took a little tiny snippet of it and I really should have held on to it a little bit longer. Look, we discussed where this thing turned, how it didn't quite make it into support, and then on this break here, it didn't quite, show a real acceleration after you broke that median line. I was really hesitant for some reason, just trigger shy on getting involved in this. Again, hindsight's 2020. At the end of the day, we rallied right through. Here's the 50% retracement, which has just been a decent pivot, but just higher. Basic slopes running off the highs here. So that converges on a longer dated 1618 extension right here, which is the exact high that you made back in August. Okay, so sort of a decent region to start looking for some possible near-term resistance on the upswing here for pound. You stay constructive in these kinds of trades, guys, when it's early in the month and you've stretched after a major. You want to just stay constructive while above the weekly open. If market price is able to sink sub the weekly open, you'd start to think that there's probably a little bit more downside pressure in it. I don't think we get back to the weekly open. I do think you hold above 618 retracement here at 3110, 3111. But I'd like to be long still. Can't justify getting long here. But if we were to get a pullback, maybe a pivot back off this line right here, the 50 line, it's been very clean. Resistance, resistance. The break saw push through. I didn't like the way we approached it on the upside because, like we always say, I don't like this dilly-dally around the trend line. When we break it, I want to see this type of move, right? So didn't have any conviction on playing the rebound yesterday. Here we are testing resistance. Again, a little bit more key resistance, just higher, 3270 on sterling. There you go, D. There are your 3. I ran with it as fast as I can. I hope you got all that. Let me know if you have any questions on any of those 3. I guess that pound was number 4 there. And last but not least, let's hit Aussie. Yeah, I got you. So if there are no other questions here on the pound, here's what Aussie looks like. And here's what we've been following in Aussie this week. So the update back on Sunday, we were basically talking about the fact that this thing had really seen a nice reaction on Friday. The upswing didn't have too much, momentum going for it. But we were at the November highs, and that 97.75, 97.80 barrier was sort of the level we needed to clear. Near-term support, critical support, still 77.35, 77.50. If you guys remember, we were citing this as an area of interest for exhaustion, long entries heading into NFPs. You got the dip in there, and the rebound higher is kind of fluttering here at a near-term extension. Remember this one we added yesterday. If we bring this into a much closer time frame, 100% extension just right off the lows gave us 77.96. The broader 618 off the high maintained a resistance of 78. And again, within the confines of this embedded pitchfork formation, you had the median line, resistance, 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 now converging on that region. So I do think you see a little pop. Okay, ideally you get back towards like 78.25 for an entry on the short side, and that would sort of give us a little bit more of a conviction recovery, I think. Don't necessarily want to press a short on Aussie here. I don't want to be long necessarily for too much, but just know that it's coming into near-term resistance. Okay. The thing I was looking at yesterday is if this was a break of the weekly opening range, here's your weekly high, you make a low. You didn't really get a test of it, right? You kind of just soared through it. But what made me think that it was the fact that we kept on testing it. Support, support, support. So look for this range break here today. Top side, I still think you look for that rally towards 78.30 to get short. If this holds, downside break, You still got to contend with 77.35, but I do think you would see a continuation move in such a scenario. Just keep in mind the broader picture that you're trading within. Neat channel caught resistance yesterday on Aussie dollar. Which low are you using, Pooja? This low from the 6th? Look at that. Yeah, absolutely. Absolutely. I'd go even deeper on that. Looks sweet. Okay, so on a move like that, thanks for pointing that out. On a move like that, it even further highlights the opening range highs, which, heading into the session here later tonight, kind of converge on support. And again, you want to stay constructive, and this would give us a target a little bit further out in time. This is back on the 12th, so basically Thursday, Friday region for a possible spike high and then a move lower. Kind of would jive pretty well with what we're seeing on some of the other currency crosses. But if you're flat, you don't want to be trying to go long here because you're at the highs. You'd need to see a concerted break of this. If you're looking for new exposure, if we were to pull back into this region specifically in time to hit the lower parallel, that might be another one you might want to test just against the lows here. But broadly speaking, I am looking for sort of an exhaustion peak here to sell in Aussie. Still think it's got a little bit more to go, though. D, does that help? Thank you very much. Good luck to all, says D. You're more than welcome. Have a safe flight, and we will see you tomorrow morning, I hope. Any other questions here on Aussie, guys? It's not a trade I've actually been, again, really active on just because I kind of would rather be short, but the only long play I liked was the Friday NFP rally. That key support barrier there was such a nice play to the upside. After we came back and held it again, this was worth another shot. Again, I didn't get a chance to get in this. This was a perfect drop. Hold of support with a real tight stop against the low would have been a beautiful play, but hindsight, again, 2020. Nice channel here that you're looking at. Thanks for pointing that out, Pooja. Continue to watch that near-term resistance or near-term sort of the broader bearish invalidation, I'd say, is 78.30. Okay. That being said, looking higher for a level to sell off. Questions on good old Aussie dollar. Number 5. Okay, quick segue to the abomination. Here's what dollar yen looks like after yesterday's break. And it was a conviction break for me, and I know it was very subtle in price action. It kind of went under the radar, but from a slope standpoint, I think it was pretty clear. Again, let's take this out to a 240, and let's also just show you where we were on the daily charts on this. There's a couple of different interpretations. If you take the median line or excuse me, just the trend line, I was using this stretch high that we made just right into the open of the year, but if you take it there, a closed basis, it looks a little bit neater. At the end of the day, this is not the trend line I'm stressing, guys. Because in fact, if you were to take a trend line just off this, it's like almost leaves you a little bit more room, right? So I'm not focused on the red trend line. What we are focused on is the pitchfork that we've been following off the lows. Hasn't been the cleanest, but you only got one brief close above that region. Here's the line chart looks like, and within the confines of that advance, there was a near-term ascending median line formation here, which showed this breaking sort of near-term the median line, shifting the focus to the downside. So the support barrier that you need to be mindful of in dollar yen near term is 111.99 into 111.85. I might have noted yesterday, which is basically the 200-day moving average. And also a basic 236 retracement of the entire advance off the yearly low. Now, we've already seen a tag of that yesterday. You saw a rebound in overnight trade. It held resistance, and here we are turning lower again. A break lower, this is an area of which I would have as a target for shorts and as an area of interest for possible exhaustion to get back on the long side. Really nice confluence, three-way here, 38.2 retracement of the advanced 100-day moving average there in blue, and the 50 line for the current ascending structure that we're in. Keep in mind this is dollar yen, so there's a reason I call it the abomination. These wick throughs are nothing surprising to me, and typically want to keep your targets on the inside, but the levels actually do look somewhat clear. So if we bring this into a 240-minute chart, there's the near-term ascending formation I highlighted last night. We've been following, what just happened? We've been following this one for a while, actually, for dollar yen, interestingly enough. If we, just reflect back to last month, close of September trade on the 27th, by the way, guys, I hope you guys realize when you click on these links, not only does it take you to the article, but it also takes you to where that chart is exactly in the article. Give it a second and it actually loads for you. I go through a lot of trouble to do that, so I hope you utilize that. That said, for dollar yen, this is what we look like basically heading into NFPs. We're talking about looking for exhaustion into the upper parallel. There was a confluence region there with an 88.6 retracement. I've since removed it just because 88.6 is, I don't want to be too stringent with it, and price action basically held that same slope. So if I were to drop this to here, you can see, broadly speaking, almost the same gradient. And I would be discounting this as just a raised ceiling exhaustion. Push higher, building divergence all the way. Boom, one last tag of the 50 line, we pivoted. Look where we held support, right at the median line. That's where we opened the week. Once we broke that median line to the downside, that shifted our focus to the downside yesterday. Initial targets were right at 112. Again, rebound higher, as we noted last night. Look for resistance initially at 1256, which is the weekly open. The high and overnight trade, 1258. So very clean price action. I get super excited, if you can hear it in my voice, when I see dollar yen doing anything clean, because I typically detest this pair. But hey, like I said, at the end of the day, if seashells are trading in a clean formation, that's what I'll be looking at. And I think this has some clarity to it near term. So how do you play it from here is the question if you're not already holding positioning. And this is, basically, it's the 29th. Let's go back to last night's update. Here's what the chart looked like last night. We basically came into the weekly open, held as resistance, broke lower. I, again, would like to see it drop lower in dollar yen. 111.10 is the upper part of the first. Let me take this back a second. The first thing you would look to hold, if you're holding shorts right now, is a break below 112. Watch the 50 line. I don't have too much conviction that you'll get play off it. You did see some pivot action here, but I would just have that as a soft target. More so important is going to be these two levels. And what I wanted to highlight, guys, is when I have these markers set like this, it's really just to give you an indication on what level we'd be looking at based on time. So for example, if we break down here today, I'm not necessarily going to look to close the trade at 111.10. I'll try to get that extension pushed down near 110.80, 110.67. But if it holds here for a while, and then let's say we get a confluence break here tomorrow, heading into Friday, well, at that point, if that breaks, I'll look to target 111 because that's where the confluence region will be with the lower parallel. So just, a side note, they kind of look funny sometimes for the untrained eyes. What are you looking at? Based on time. If we break closer down to here, near term, I'd be looking lower. If the break doesn't happen until later this week, I'll be looking for 111.10. And again, near-term bullish or bearish, bearish invalidation. I'd still have at the weekly opening range high. That's 112.82. Questions on dollar yen? That was a mouthful, I know. Any questions on what the yen is doing? Obviously, a big reactor to U.S. data, very sensitive to interest rates, and certainly the CPI, Consumer Price Index, release on Friday. That's probably when you'll see most of the volatility here. Dollar yen, going once, going twice. Sold. All right. So let's take a segue to Kiwi dollar. Iman says, hey, Iman, great to see you in the room. I took dollar yen short after your article. Yes, awesome, awesome. I hope you did well on that. And again, when we let me take this back. When we look at the momentum, there's a lot of different things that also continue to suggest that you want to still look lower. So on the rally here, if you look at the 60-minute chart, is the 120 even same thing. I think the 60 did the same thing, not 560. Gosh darn it, what is this? There we go. Look where momentum continued to hold. Textbook 50 kind of struggle, and when you see these multiple dips into oversold and 50 hold, that's kind of the real strong tell. So if this were to break this region, neutral into here, possible exhaustion again, but I wouldn't want to take or test anything on the short side if we get above 112.82. Downside targets pretty clean. But you don't advise to close before FOMC minutes. Depends where you are in the trade, Iman. I can tell you just what I personally do. And Iman, when is it Iman or Iman? I hope I'm saying it right. If for me, I'm holding a position and it's in the money heading into a major event risk, depending on how deep I am in the money, I'll always bring my stop in to a break even or better, or against the previous high. The problem I've personally run into trying to do that too aggressively is that you're going to see some volatility, and if price just kind of whiplashes, a lot of times you'll just get stopped out for no reason. So, Iman, it depends on where your entry is. If you have entry north of 112.50, I would say, I probably just have the stop against the overnight high, 112.45. Yeah, so this is what I would do. Again, this is just my personal opinion. If you get into the U.S. trade session, this thing hits 112, I would take a little off that trade and bring the stop to break even. Let it pan out. As I said in last night's update, I'm not expecting any new revelations from the Fed today. Okay, the minutes that will be released are largely have already been reflected. That sentiment has already been reflected both with the dot plot, the updated projections, and the Yellen presser. So this is all old. I don't think there's going to be anything new. Does that mean it can't charge some volatility? Sure. Could it give it the dollar a little bit of a rebound? That's what I'd be concerned about. So I still think 112 is a pretty good level to kind of do something. Bring your stops in, take a little off the trade. If it gets the break, great. You got another 100 pip drop nearly, 111.10, 110.80, next two targets on the downside. And one other subtle thing, now that you just bring that up, one other subtle thing, I'll be talking about this on Daily Effects actually, guys. I'll be doing a Foundations of Technical Analysis webinar where we talk about just the minutiae of trading on a day-to-day basis. But one of the things I'm going to be discussing is this concept. When you're in a trade, guys, a lot of things that people don't take account is time. We talk about when to enter the trade. We like using the crossovers for the Euro US session, or whether it's Asia Euro. But when you get out of a position, when you're holding a position, largely speaking, and this is kind of just a generalization, you want to kind of wait till the close of the hour before you make any decisions on whether to enter or close a trade. Why? The phenomena that we talk about of opening ranges, this is a phenomena that can be scaled to multiple time frames. And again, don't take my word for it. This is what our research has shown. And if we look at an hourly chart, if in downtrends, markets will tend to make their high early in the hour and their low late in the hour, and vice versa in uptrends. So if I jump into a position, and this is kind of what I was thinking about yesterday, and while I did regret closing dollar Swiss a little early, it worked out really well because we got out right at the low for this stretch here. And why did I get out at this time? Well, I kind of waited for the close of the hour as we were moving lower into the hourly close and heading into basically the 11 o'clock hour. You saw a little bit of a bump higher, and right before 11 close, you made that low. So we could have been faked out and kind of jumped out early, but a lot of times the market will continue to extend into the close of that hour. Not necessarily down tick at the bottom, but you know what I mean, in the latter part of the hour. So a little sidetrack there. Sorry to digress, but something we'll talk about more on Friday. But yeah, heading into the release, I wouldn't necessarily get and shake out of the position. I would just kind of readjust my stops. And if you're at a decent support level, um, make sure you're doing something there. Does that help you, man? She says definitely. Thanks. Hey, you're more than welcome. My pleasure. My pleasure. All right. And that is dollar yen. Finally getting some play in one of the trades, one of my most hated currency pairs. Not so much these days because it's actually paying us, but I digress. Okay. So that is dollar yen. Let's stick to the dollar crosses and just finishing things up here. We'll go over dollar CAD. That's the last major that we've been tracking. And Kiwi. How could I forget? Let's do Kiwi first. This is number 7 on the session. We'll talk about Kiwi dollar. So it's kind of a boring trade. I still think it is, but the levels were kind of clear when we opened up the week, and we wanted to maintain a near-term sort of short play while below this 618 retracement. Not only on the account of this being a near-term critical Fibonacci consideration, but it also saw a decent pivot. Price held there for a few hours before breaking. We checked it as resistance, couldn't make a close above before continuing lower. Heading into the start of the week, as we highlighted, the median line converged right there at 71. So ideal scenario were you to get some sort of rally into this region, find a short exposure there and push lower. Kiwi is one of the only ones I'm actually comfortable being long the dollar against, just because on a scalp basis or on an intraday basis, just because we've broken some pretty big levels. We've broken some pretty big levels. For me, the move below 71 was pretty big. Okay, so this is what the daily chart looks like. And you have the 618 retracement. We just talked about that on the intraday charts. You also have the former swing highs from back here in March. So clear pivot in price, resistance, pull back, break, saw acceleration. And on the way down, we held there for a day, break, we're checking it as resistance. So technically, as long as we're below this, I don't really want to fight that. Now, if the market breaks 71 and closes the daily close above it, when the market changes, we got to change. We got to adapt. But as it stands right now, I'm not interested in any necessary long exposure while below 71. I see a short coming up for us at 71.02. Your thoughts, Kelly? I think you might have typed that right before I spoke. Did you get it? Yeah, I do think too. I mean, the thing is this. Objectively, what makes this even cleaner is that the monthly opening range, the weekly opening range at this point, is pretty well defined. Here's your weekly open. You set a high, you set a low. Look where we tapped resistance, right on cue, 71, before pulling back. And really just sets a basic opening range for the week. So, objectively, despite what Mike Boutros or Jamie or anyone thinks, it's set a pretty decent range to start the week. If it breaks to the upside, you do have a risk for recovery in your 71.30, 71.70s on a stretch. But I'd be looking to fade a rally towards those regions if we get it. On a downside break, my favorite move is you see this break to the downside and you see a dip near 70, 70.08, and then it's stacked below that. You have a 764 retracement and then a whole bunch of longer term, near term, median line formations that gives you a range basically from the 70.07 level down into like 69.80. So like a 30 pip range here that you really want to be watching very, very closely. That's this. And it's also basic trendline support all the way from the 2015 lows. That's even higher. Nice, and thanks for that love mornings with you. Hey Kelly, it's a pleasure to be here. My pleasure, sir. All right. Questions on Kiwi before we move on? Nice reaction at resistance. Could get, some more sideways lateral movement. End of the day, I kind of like it lower below 71. Major support heading into the 70 handle. Next up, and the last dollar cross that we want to cover for the day, well, I guess we've covered all of them, but the major last one would be dollar CAD. Another one which we discussed the fact that it turned ahead of resistance last week, and I kind of, didn't know, whether I should be chasing it or not. And we broke support earlier this week as well, right here. Basic trendline support extending off the lows that we made right here. Boom, boom. Slope was pretty decent, not the cleanest. Did see some pass-throughs here. This is where we were looking ultimately for the short. We didn't get that, and we failed right ahead. And then we talked earlier in the week about the break below this trendline support. Guess what? It's been just resistance, 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 resistance for the last day. So I'm more inclined to think and look lower. The major support break you'd want to see is 24. Again, we talked about how critical of a pivot zone that's been. Support, break, resistance, resistance, resistance. Break saw rally, support, support, converges on two major fib considerations, and that gives us basically 24.15 to 24.20. Again, if we bring this into a little bit closer of a time frame here for the intraday, I just want to see what this looks like. Could be some channeling action here. And actually, that gives us a nice confluence rebound of resistance there as well. Based on time, watch that lower parallel. Looks like right into Friday. You're going to hit that median line. Again, guys, this is a 60-minute chart, so a much more closer time frame, right? I mean, it would be an ideal. That's my ideal play. Obviously, you're going to get people calling that this could be a bull flag scenario, and it very well could be before a last exhaustion rush to the highs to finally tag the resistance we missed last week. I hope that's not the case, but even near term, it kind of does keep my focus lower here in dollar CAD. The rally in momentum failed right at the 50 region before pulling back. It's just I haven't gotten any juice out of it this week. The range is just so tight. So hope that helps. Keep in mind 24.85 is actually the monthly open for price. So the monthly opening range essentially has just been straddling this region. Resistance, resistance, pop, support. So keep things as objective as you can. Just always look back and kind of be like, all right, well, we haven't even broken the monthly opening range. Yeah, we're sliding below this slope support, but there's the monthly open again. And we kind of saw some real nice rebound there. So look for this sort of consolidation to give way. Ideal scenario, or my favorite scenario, is ultimately you do see that last push lower for a move on 24.19, and ideally 23.40 if we get a break of that. But for now, I'll work with a bearish outlook well below former slope support. Questions on dollar CAD? All right, that is the loonie. Number 8. Okay, I'm just gonna take a quick segue to update you guys on Pound Oz, and then we'll go over Bitcoin and gold. But Pound Oz was also a trade that we had highlighted. Kelly, I think it's regular time today, 11:30. Or 11 o'clock rather. Yeah, today's webinar is with Jamie same time. So as far as the Pound Oz is concerned, sorry, I lost my train of thought there for a sec. Pound Oz. Here's what it looked like real early in the week. And we were trading within the confines of this descending formation. This is where we were like, all right, well, this is kind of pretty clear. You look for a break of this range. You have confluence support at 67.30, 67.20. You have a confluence resistance at 69.06. Let's just call it the 69 handle. And you look for a break of it. I wanted to see a dip here to buy for the break of the upside. It didn't happen. You didn't get the dip first. It ripped through the high, and now we're testing that as support. So for Pound Oz, here's what the picture looks like now. Where's Pound Oz? Here we go. And let me just zoom this out. So again, in comparison to where we were on the Sunday open, we broke right through. We hit that 69.06 target, and now it even served as support. Now momentum is flatlining right ahead of 60. So there's not really too much push, I want to say, to the upside here. And you've seen, obviously, that near-term recovery in both Aussie and Pound. Pound is another one where, like I said, we broke to the upside, but we're kind of coming up against some near-term resistance. Even if we were to stretch higher, I like 32.70. Again, if we take a quick look back at Aussie, this is coming in some near-term resistance, could get into both of these first. So what does that mean for Pound Oz? Well, you could see some more lateral to slightly higher price action, in my humble opinion. Still like the upside. I just wish we would have bottomed at a little bit more of a convincing support zone. One thing I do want to take into account, because now that we kind of shifted that break, we never looked at this retracement. And if we do that, you see that we actually rebounded perfectly off of a basic 38.2 retracement. Whoops, it's not the low. There you go. So a perfect touch of the 38.2 before the rebound higher. So I still like the broader upside in the trade. I would bring my bullish invalidation level up now to the low that we made for the month, which is the monthly opening range low, exactly at a 38.2. Really nice setup. And I want to stay constructive here. The only thing you have to always keep in mind is that it is up against a huge resistance level. Okay, the 2017 open, huge pivot in price resistance all into the close of last year. Perfect, picture perfect touch of resistance, break, acceleration, support. On the way down, we saw a bounce before break, acceleration, perfect resistance, 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 continue to converge right on the upper parallel held this week. Right on the upper parallel, this week. So, I mean, even if we were to get a pullback and opportunity along, that's what your target is. This is what needs to break to really open this thing up. This is a 2015 trendline resistance extending all the way to the highs. And certainly, for me, it would be a game changer for a much more substantiated topside break. I do inevitably like that break. But first things first, we got to get through this 71.19, 70, 80 barrier. Questions, comments, concerns on Pound Aussie? Okay, that was number 9. I do want to take a quick look at Bitcoin. Then we'll come to gold. Number 10, here's what Bitcoin looks like. Really, this thing is just ridiculously clean. It's kind of disgusting. Here's what the daily chart look like. Well, I mean, let me start out in the daily chart. So the basic premise coming into the start of the month was a break of this resistance region, and we wanted to see support hold here. You got a couple fake outs, but we did inevitably see the break of not only the upper median line parallel, but also the monthly opening range highs and the actual median line for the current operative formation we've been in. So that shifted the focus up. We targeted 46.60 as the initial thing. We sailed right through that. Near-term support is now right there at that 46.60 region. And you're basically looking for a check of the yearly highs. We came within striking distance, right, an overnight trade, or excuse me, last night before I wrote this, of the close high. The actual record high comes in at 49.79. So we noted earlier in the week the threat for some sort of corrective pullback while below 48.31, specifically because right here, when we first highlighted it, it converged right on a sliding parallel off that high. Okay, and then you also had the reversal, 4-hour outside reversal bar close, and that gave you 48.30. So we were looking for a hold there. Yesterday, boom, spiked right high. We spiked higher through it, but look where it found resistance, right at that parallel. And as soon as you see something like that and a recovery back below, this is your signal to sell. Stop against the high, looking for a move back towards the median line. Now, that median line converged on this region, the former record high day close, earlier this week. Now I would, bring my target in a little bit, guys, just to account for time and this slope, this median line, 50, for the operative ascending structure. So based on where we are in time, that brings it up a little bit to 46.50, maybe even 46.60 again, which is the top of this range. All right, does that make sense? Near-term risk for Bitcoin, a little bit more of a near-term, just a move to the downside. I wouldn't necessarily be aggressive in shorting this. I'm more so looking for long entries on a move lower. So I hope that kind of clarifies. Sure. And Iman, I always appreciate the feedback. Anytime you guys have feedback for me, absolutely send it through. So Iman says, Michael, there is always a specific direction in any pair, either uptrend or downtrend. Then we have a pullback as a corrective move. I don't know how to play the corrective phase. Any help or clue? Can you keep me in your considerations for clarification on Friday's webinar? No hurry for today, thanks. Absolutely, Iman. Yeah. You know what? I'm going to actually jot that down. So identifying trend and playing the pullback. Okay, I got you. And just to address that real quick with a kind of one-liner, that's why the whole point, Iman, is that what I do here daily with you guys is I walk you through the daily chart, so we always have that picture. Even if you're trading on a micro scale, so you're trading on a 1-minute chart, okay, literally, you can't just do that blindly, right? You have to know the broader direction and where we are in trend. Once you have conviction, Iman, about what the larger picture is doing, playing the corrective pullbacks, they shouldn't be all that hard to you. It's the psychological thing that you have to get through is the hardest part of trading pullbacks, because the trend is to the upside, but you're at resistance. So you're kind of reluctant to do anything on the upside because your broader bias is paved that we're long. We need to kind of let go of that real adherence to very, very strict biases, right? If you're trading on a closer time frame, you can't fall in love with the trend because you're going to miss great opportunities on counter trend moves. And with the same respect, if you're trading long term, you should not be drilling down too deep into an hourly or 4-hour chart because it's just going to waive your consideration of what you're looking to do. So a lot of it's based on the strategy you're working with, the time frame that you're using, and the kind of risk management you utilize. If you're someone who's looking to put a 20 pip stop, that's very different from someone who's willing to put 100, 150 pip stop and look for the larger swings. So we kind of just got to keep in mind what time frame you're looking at. But we'll address that, Iman. Great question. I hope that offers a little color for you. Also, you want to note that anytime you're trading counter trend or you're playing the pullback, you want to trade on a lower leverage inherently because you're going against the broader trend. So why would you put down the same amount of risk that you would when you're playing the direction of the trend? So that's another thing a lot of people tend to overlook is adjusting your leverage when trading counter trend. So that worst comes to worst, the market just boom reverses and continues on its way up. The losses are minimal, and that's not the ones you want to trade. So being dynamic with your trade size is another way to practice good risk management. So again, hope that offers some color on that. Any questions on Bitcoin before we move off? I still think the threat is for a little bit more of a move lower. Ultimately, this is still a constructive trade any way you slice it. and we should be looking for a pullback to get more entries back on the long side. All right, last but not least is the gold trade. So here's what gold is doing. We talked about the fact that we added this near-term pitchfork early in the week, and we really wanted to just kind of drill down that it was kind of way too early to decide whether that pitchfork was going to be in play or not for gold. But as we always know, the upside break of an ascending formation typically gives you a sharp move. Not just that, in this specific instance, I was looking for confirmation of this descending channel. Remember, we only had 2 points of contact, so 2 points speculative, 3 points is confirmed. If we were to break and hold above that as support, that would be further validation. Well, we sort of got that break, checked it as support, moved higher, but the break above the upper parallel really lost steam ahead of that final target, which was 1297. So, excuse me. So I'm still looking. Let me take a step back. I still think it can move higher. I still think it is constructive. I just think that you're losing a little bit of oomph here. So the momentum has kind of looked like it's struggling a little bit. I would stay constructive above 1280. Let me say this: the broader bullish invalidation is the weekly opening range. Okay, low, which comes in basically at the weekly open, but from a near-term standpoint, I kind of want to see it constructive above this 50 line, just because of the rallying to resistance. We turned right there before launching higher. It'd be sort of a nice place where you find some support if this thing were to break down, but ultimately I'm still looking for a tag at 13, 1297. Basic 38.2. If you take a look at the daily chart, it's also the opening range highs for the year. Okay, here's your April high. Test it again here. Test it again here. The break of that level saw acceleration. That zone comes in just ahead of the 38.2. So basically 1295 to 1297. That's the level you need to beat to get validation for continuation. Again, gun to my head, what would you do, Boutros? I'd say maybe this thing rallies into this region, pulls back, gives you an opportunity to get back on the long side for the stretch higher. And that's what kind of these levels come into play. So those are my thoughts. I wish there was more structure to the advance, which, I mean, this is obviously going to be start to become very obsolete, guys. I'm just leaving it on here now for color, but don't stress this slope just yet. Don't stress this slope just yet. Any questions on bullion prices or where we stand at this level? All right. Any other questions in general? Feel free to throw them on the message board. That kind of covers everything that we wanted to follow up on today. Don't forget, Jamie's up later this afternoon, later this morning, I guess, at 11 o'clock a.m. for the midweek strategy webinar. So make sure you stay tuned for that. And we'll be back on board tomorrow morning, same time, to wrap up the week and give you a quick preview as we head into the final day of the week, where we get the CPI numbers, advanced retail sales, and Michigan. Fabulous morning with you, pal. See you tomorrow. Hey, same to you, Kelly. Pooja says Euro Oz if you have time. Absolutely. I'm always willing to oblige. Pooja. This thing. Let me get rid of some of this nonsense. It's been a really tricky trade last couple months. So you're checking the 2017 high day close right now as we speak. Pooja says trend line from the August 2015 high. Yeah, I see what you're talking about. Well, it had a third tag, so yeah, I mean, technically that is a trend line break. And let me just say for the record, me and Jamie are both of the same mindset that this thing is put in a pretty major low. I do think there's tons of upside room here for Euro odds. That's just my humble opinion. But obviously, we've been working with a constructive slope since the start of the year. The question is, Pooja, how do you trade it? Really nice defense of that support, former resistance, right? Let me check this out real quick. Okay, so look, right now there's no trade, at least in my humble opinion, from my standpoint. Why? Because you're testing the range highs for the year, the opening range, not the opening range, the yearly high day close, and all that good stuff. Just higher, you have the parallel, which obviously we sailed through earlier in the year, turned ahead a bit here. That comes in at 53, just a big psychological figure. This is the zone. I was hoping that this slope would actually give us a convergence over here. It didn't. So I'm not going to stress that. But this is a pretty big zone in my humble opinion. This. And let's take a quick look at the intraday chart for you here. Ew, look at that. All right, so the 50 line caught the high. You've been pivoting all along the median line. We're testing the median line too. Yeah, so here's what I would say. Near term, the risk would be for some sort of near term exhaustion pullback off this region. You do want to stay constructive. Ultimately, based on the weekly chart, I'd want to stay constructive weekly. Based on the 240, the intraday chart, I'd want to stay constructive above the weekly open. That's kind of where I'd be focused at. This is near-term resistance, a breach. You're looking for the 50 line again. That gives you basically 53.70, but 54. So first look for 53, 53.70, and then again 54, 55 would be sort of the major level of resistance, and that takes you basically right into that key region that we just talked about. If my mouse will move on the daily chart. This region. Actually, I should put that 618 here too. Make sense, Pooja? Does that help? It's been a very tricky pair. I know you love this one, but I'm would be reluctant to do anything here. I do think you probably get some sort of pullback off this region. At the same time, if it breaches, I'm not going to chase. There's nowhere to put a responsible stop on there until it's below, the weekly opening range low, and that really opens it up. Larger range ATR, you'll have the opportunities, I think. For me, this is a wait and see to see how it reacts here at the 2017 high day close. Make sense, Pooja? Yes, thanks. My chart is different with the August trend line 15. My chart is different with that August trendline 15 trendline. I'm hitting it from down here. I didn't have it snapped. Much cleaner that way, right? I see what you're talking about. I'm sorry, that was my fault. I didn't snap to the high. Yeah. Hey, that's even better. The weekly opening range low, which is what I just noted was the kind of bullish invalidation level, is right basically at that trend line now. So yeah, it's still looks constructive. My only concern is, again, the consideration for the yearly high day close and that trend line just higher at 53. Okay, I hope that helps. All right, guys, we'll wrap it up here. Like I said, see you all tomorrow. Best of luck trading. Iman says, thanks a lot. Having super opportunities from your work style. Cheers. Hey, Iman, that's our goal here, and I appreciate the feedback. Pooja, same to you. Guys, I will see you all bright and early tomorrow morning. Best of luck trading. Cheers.